record and start the webinar. Alexia, how are you?
I'm good, Simon. How are you doing?
Really well, really well. We're a couple of minutes early and
Okay.
I'm just going to sort of tag in very soon.
Okay.
So we'll catch in. How's your day been? Good?
Yeah, not too bad. I'm just thinking glasses on or off, reflective. No, we'll put them on. Okay.
Put them on wherever you're comfortable with.
All good.
Oh, that's good. That's
yeah,
good.
I was reading an article this morning. CBA is predicting, 15 to 16% increase in homes.
Okay.
So it's probably a good idea to get in now, I think.
Yeah, well, we're certainly seeing a bit of movement in the marketplace. It's certainly keeping us active. We're looking forward. We've had some great results at auctions and also, some good auction results coming forward. And I think this year is going to be a strong year from a real estate perspective.
I think so. Well, and they're also saying the next 3 to 5 years, there'll be no movement with interest rates. So it's a good time. And it's a good time to lock in. So a lot of the banks, they're fixing, sub 2%. So you can get 1.99, 1.99 for 3 to 4 years.
Okay.
So, good time.
Well,
good time to pay down. But, owner-occupied home loans, they aren't really tax deductible. So that's the one you really want to pay down. So,
take some advantage there.
A big chunk of it fixed, and then you keep part of it variable so you can focus on paying that down.
So bring that down and working our way from there. Excellent. Well, it's 12:30, so we better do a formal introduction. I can see there's people joining us, and I'd like to welcome you all. My name's Simon Perry, for those who don't know me, obviously the Managing Director of Prudential Real Estate. And today I've got joining me Alexia Pettinon from a new business just about to start from her, Bid and Borrows Finance.
Hi, everybody.
Alexia, you are typically known as from iChoice, but now moving into Bid and Borrow Finance.
Yep.
Great adventure. Welcome aboard. You're a mortgage broker.
It is exciting. Yep.
But your mortgage brokerage is a little bit different. So look, tell me a bit about you, your mortgage brokerage, your goals and what you're aiming to do with your new business.
Yeah, sure. So look, being a mortgage broker and not working directly with one particular lender really does give you an advantage. I've got access to, over 30 lenders, and each lender is, quite specific in terms of their policies. No one bank is the same. And what I personally, I think what I offer is I have a look at your overall picture and what it is that I can help you with, because everyone has a different story, everyone has a different scenario, and no one person, should be treated the same. It's not a blanket scenario of how someone's finances should be treated. So, I like to sort of dig in a little bit, see what the long-term, prospects are and, what your goals are and work from there.
Okay. Now, you've been doing this for a little while. How many years?
Yeah, I have been. So, look, I've always been in the property game. I've been, since my late teens, worked in property development and in the finance. So the figures have always been around, what I can and can't afford. So, but I've worked, for property developers and then always liaising with lenders and private funders. So, been working on the mortgage side, about 6 years now.
Okay, good on you.
So it's been good.
Okay. So, look, let's talk about loans in general. Is there such a thing as like the loan market? Because let's be honest, there's dime a dozen loans, there's dime a dozen banks, there's new banks coming into the marketplace every day of the week.
Yep.
Is that a thing, or are we just?
Yeah, look, there are lenders that come into the marketplace. So yes, there is a loan market without a doubt. And there's a plethora of banks and lenders to choose from. So you've got your top tier, you've got your St. George, Westpac, ANZ, your top tier lenders. Then you've got your second tier lenders, AMP, ING, Bankwest. Then you have another tier where it's funders who source their money from those lenders, but they package it as their own. So, I have access to, like I said before, over 30, 40 lenders that, I deal with on a daily basis. So there is most definitely a loan market out there. Now, having the advantage of having a broker is that I'm able to access all of them. If you were going to if you were dealing with stuff on your own, you'd have to go and attend the branch or speak to someone personally, and that could very time consuming. And, you know, you could be wasting time if one particular lender doesn't really suit your profile.
So I'm a homeowner and an investor. I've got a couple of properties, as you're aware, and I'm always looking, like, I just set and forget. I'm being a culprit, and I appreciate you've brought this to my attention many times, and you've helped me fix these things. And that's the reason why I bring this out to, obviously, our clients, is because Alexia brought it to my attention, is that, you know what, don't get comfortable with your mortgages, don't get it. Now, I sat with the bank and sat with them for many years. Now, you said to me, Simon, it's time for us to talk. And you took me through that experience. That was great. How often do you suggest to get someone to go out and check their mortgages? Because to be honest, I just paid every week and I just get on with life.
Yeah, no, for sure. You do set and forget. And I'm a culprit myself because I'm too busy looking after everybody else. But, you know, every 2 years, it's always worth, first thing I would do is call your bank. Have a look at what's in the market, call your bank. Say, you know what, look, threaten them a little bit. Say, look, I'm planning on leaving. This is what I can get. Can you match? Can you do something? Can you reduce? Can you, you know, even talk to your original broker because they can do what's called retention pricing. So, yeah, so they, as a broker, so you would come to me, you're my client, and I would say, you know what, Simon, leave it with me. I'm going to do some pricing for you, send it through the bank, see if we can get more of a discount than what you're on. Okay, so that would save you money. If they don't budge, then you know what? I'll say this is what other banks are offering. Let's see what we can do. But you know, every 2 to 3 years, because also what it does do is this. The main focus is saving money. But if you've got a loan that's 27, 26 years old, you're making repayments based on the 26-year term. When you refinance, it comes back to a 30-year term. So it extends the term back to 30 years, which then reduces your monthly exposure. So not only are you getting a cheaper rate, you may get a rebate, you're also extending the term again, which reduces your exposure.
So the one thing which is interesting about myself is when we did it, we kept the term, but you're able to negotiate a better rate for me. And I made the headline, well, look, we reduced the mortgages by $500. Now, my circumstance is a bit different, but I know you've done this for plenty of other clients at the moment, and you've been actually able to save them up to $500 that I'm aware of. And obviously I'm an outsider and I've had just great reports from it. How did you do that? Because for some of them, it wasn't necessarily the term. From what I understood, you got a better interest rate, sometimes with the same bank. But
so that's right. There is one that's actually active at the moment. So, you know, let's just say there's a couple of examples here. You have a variable loan. You can fix it. You can split it and fix part of your loan so it gets a great rate, which is close to 2%. But sometimes it's not always worth going to another lender. So this one particular client, he's at ANZ. The bank wouldn't budge on his rate. So I said, you know what? We're going to refinance your lending within ANZ. So we internally refinanced it to get that better rate. Plus, we also took another loan that he had with another lender. So you can internally refinance to get the rate that they're offering.
So ultimately, when they went to the bank, they probably walked into the branch and said, look, I've got this, can you do a better rate? They ultimately shut the doors on them.
Yeah, because they really focus on new business and new customers. That's how they get the good rate. So if you're an existing customer, you know, they like you, they don't love you. They like you because you're their customer, but, you know, you aren't a new customer and they don't want to bring you on board because they've already got you. So there's no really incentive to but, you know, they're a bit silly because they may lose you. But in this instance, we were able to rewrite the loans and get him the rate that he wanted and save him, you know, he was saving an extra 1.2% on his interest. But also, you know, his interest only term was expiring. So we got him back to the 3 years again.
So that's a considerable drop, like they saved 1.2%. which I look on numbers, I don't know. But if what I say to most of our landlords, if you reduce your rate by 1%, you're probably getting a $50 rent increase a week without actually increasing your tenant's rent. So ultimately what you've done is you've reduced the mortgage repayments for this guy. He's still paying them off. It's not like he's absolved from it.
No.
But the funniest thing is that the own bank sort of closed the door on him, but then you've gone ahead and refinanced and off you go. You've got better rates for him and a considerable saving there, because even on a mortgage of what, 700,000-800,000, that's probably $500-600 straight there on a monthly basis.
Very much so. Very much so. So
wow.
Yeah, so it was a great result for him. He's super happy because he didn't have to change any of his banking. Kept it all, and we brought another loan over that was external. So he's now got all his lending with the one bank. Well,
with the one bank.
Great result.
So, all right. So, I see there's a few people on here listening, and they're probably first considering what should I do. So, what would you recommend? Okay, they want to save money. Let's be honest. We're all owners. We own property. We don't want to make other people rich. We want to make ourselves rich ultimately. If we can save $1, it protects the tenant, because if we've got a good tenant, we don't have to do a high increase of rent to recover our costs. So, what's your tips moving forward? How does me or some other person save $500 a month? What should we do?
Look, the first thing I would do is this: call your existing lender, see what they can offer you, see what rate they can, a better rate that you can achieve. If it's not in line with what's out in the market, talk to them. See what they can do. And if they can't do something, have a look at the structure. Have a look at, if you're all variable, fix a portion of it, because it's almost like a 50 to 70 basis points difference between your variable and your fixed. Okay, so for a home loan, you can get fixed around 2.04 or 199, but the variable is around 2.6. So there's your 50 basis points. So fix part of it. If they can't do that, if they can't reduce your rate, if you're unable to fix part of it, give me a call. I will then assess your circumstances, see what lender we can go to, and see what rates are on offer for you. Also, some banks are offering rebates.
Rebates? How do they work?
Rebates. So if you've got a loan that's $250,000 or more, the bank will give you $2,000, $3,000 or $4,000 to come across.
So the banks are really competing for the business now, it sounds like. But what's interesting is their existing clientele, they're not, like if I walked in the office, they're not going to, their branch, they're not going to fight for us. But yeah, if they go through you or some other bank, they will fight.
Yeah, so the majors are fighting. But in saying that, not all the major, their rates they're all competitive in their rates, but when you go to a second tier lender like an ING or an AMP or Macquarie, their rates are a little bit sharper, but they're not offering the rebates.
Okay.
So but I will give you those options. This is
you will assess the options,
and I will give you the options that are on the table.
Okay. So some interesting learning here. So going back to our own banks is obviously one thing that you suggest, but in saying that, you're probably suggesting that, there's more chances of going further by having multiple opinions in that regards. Yeah.
Absolutely. Absolutely.
I've just had one quick question, and I don't know if you can answer this, but I'll try and reply to it.
Sure.
One of the questions is that, is it feasible to keep money in an offset account to vary, obviously, and I'm assuming this is the loan amount. Now, maybe you want to give a quick explanation of what an offset is. The short answer is yes.
Absolutely.
Okay.
If you've got a variable, you can't offset a fixed loan.
Okay.
So your fixed account is locked away. But if you have, some funds that you're not going to use and you want it to work for you, my recommendation is to have a variable loan with an offset. Or a redraw, okay? So when you have money sitting in offset or redraw, what it does, it offsets the interest portion of the principal and interest loan, which means you're paying off more of the principal. It just means you're paying off more of your loan a little bit quicker.
Okay, fair enough.
So it's always worthwhile. If you have surplus funds, stick it in your offset. So let it work for you.
Okay, that's interesting. So, let's say we've gone down and I've been used to a mortgage repayment, and I'll just pluck some numbers of say $650. a week. So let's call that over a monthly period of say $3,000 for the sake of discussion here. We come to you, we're able to negotiate a better rate, which ultimately means that my mortgage repayments, including interest, are no longer $3,000, they're $2,500. Do I cop any penalty if I say, well, look, I want to keep my mortgage repayments at $3,000, but obviously that $500 goes towards principal, helping me pay off that loan quicker. Yep. How do the banks look on that? Do they favour this or do they disfavour it?
No problem at all. Banks like, when it's an owner-occupied loan, the banks love that you're paying down your principal place of residence. Now, when it's a fixed loan, you are only limited to a certain amount. So that's why I'm a big fan of, if you have a $500,000 loan, fix $400,000 of it, keep 100 variable, so you can pay down as much as possible. You're not restricted to how much you can pay on top of your monthly repayments.
Okay, so you actually encourage, and I guess even for investors where they have the objection to pay off their loans, because I think there's some advantage of doing that, that still is available as well.
Without
and you
doubt.
can do that as well. Okay.
Yeah, it is, especially again, that's why banks, or the industry, you can't do interest only for your principal place of residence. They want to see that you're paying that down. Investment debt, by all means, you can keep it interest only. Again, those rates are super cheap as well. But yes, there's no problem. You can have multiple investments with interest only loans.
So what's the future with the loan market? Are we expecting to see a sudden surge of interest rate rises next week, next month? Because it varies every minute by the moment.
No, well, you know, the industry experts are saying that for the next 3 to 4 years, the rates won't move. They need to really, given what we've had with the pandemic, they need to generate, you know, business. They need to have Australia open again. So if interest rates rise with, you know, with what's going on, it'll be a disaster. So they are saying that interest rates will remain steady for the next 3 to 4 years. That's why it's probably a good opportunity now if you're wanting to lock it in. You know, the rates are super cheap, lock it in. At least a big portion of it.
There's no talk of them going any further down. We can't negotiate 0%.
I wish. Look, I think it's already at 10.1 at the moment. I think so. There's not much. If we do go any further, we'll be like Europe, I think, Simon. And
that's not a good thing. So let's hope we don't go there.
But you know, in saying that, let's just say they do move another 5 points. It doesn't mean the bank does. So what the RBA do and what the banks do don't always go hand in hand. You know, they should be, and you know, the PM wants them to behave. They don't always.
They don't always. Okay. Alexia, you provided me some great insights here today, and thank you. And for our clients, I hope they've had it. Now, okay, how do they get in touch with you? How do they reach out to you? You're remote, so you're not fixed, but how do they get in touch with you?
Yeah, so I will be at the, you know, the Prudential office 1 or 2 days a week as well. But you can call me on my mobile, and, you know, we will upload some details onto this webinar. You can on the mobile 0438 631353, and I'll also stick my email address on there for people to access me, and we can do everything virtually, so no problem. Or if you want to meet, happy to meet here at the Prudential office, no problem at all.
Excellent. Well, Alexia, thank you very much. And I normally say this at the start, but I sort of got a bit excited and got straight into it. Please note the information we provide to you is not of financial advice. Each circumstance is different. So I do suggest, and as Alexia has alluded to, you're probably best to meet with Alexia to discuss your individual. And these are just overall numbers that we've provided with you today.
Most definitely.
I really hope everyone's got a lot out of it today, and I hope this has helped you guys. If you do wish to reach out to me, I'm more than welcome to provide a soundboard to have a discussion. Alexia is obviously the professional in this field, and I do say that the reason I engage Alexia is I only refer people that I use for my own personal business, and in addition, I trust enough to be able to, and I've known Alexia now for many years, and I know that I can trust her with anyone's accounts. She's done a lot for me, and I'm sure she'll do the same for you. But Alexia, thank you very much for your time.
Thank you, Simon. Thanks, everybody.
We look forward to talking to everyone soon, and we'll talk soon. Thank you kindly.
Thank you. Have a good day.
Have a great day.
Guys.
Take care. Bye-bye. Bye.